From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 22nd, 2017. I hope you had a great weekend and ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. And as always, as you go throughout your week, be sure to use appropriate risk management strategies in all trade setups. Let's get started here on the USDCHF, the dollar franc. Of course, here on this currency pair, we're looking at the daily time frame, and this currency pair has been in a significant sell-off over the past several days. You can see it falling from all the way up here into the 1.0100 level, all the way now into the 9700 level. So quite a significant fall off here for the dollar franc. It's an interesting area that we're coming into, the green, yellow, and blue zones that you see down here at the bottom right hand corner. You go back to the left and you look at this black circle, and you can see historically, and even to the right and left of that black circle, we've seen resistance at the green zone, some congestion around the yellow zone, and support at the blue zone. So if you're looking for your next significant support here for this currency pair, I think the blue zone comes into play as that next support. We're looking into 96.80, 96.60 as that blue shaded area. It's a difficult place to go short right now, though, because we are at the lowest low of the trend, or the momentum, or the sentiment that we've had for the past week and a half or so. This run, at least, we're at the lowest low. And so often when you're at the lowest low of a trend or the bottom of a trend, it's difficult to go short because it's uncertain where the next profit target or the next target of support will be. And that's the case here. It's uncertain. How much lower will it go before we have any sort of retracement? The market doesn't go in a straight line forever. Often it will go in a line and then eventually have some sort of pullback even before continuing that straight line. So at least at this point, it's a difficult place to go long because, or short, because it's at the bottom of the trend. Now going long might be enticing too, because you might expect some sort of retracement, but there's no guarantee of a retracement. So it's a kind of a difficult currency pair to trade right now. But at least these areas, the green, yellow, and blue, would give us some points of interest to decide where we might look for one of those trade opportunities. If we're looking for a reversal, we're probably going to start looking to it closer towards that blue shaded area. If we're looking for continuation, we want to look for breaks of these levels for continuation lower. Let's go ahead and take it on down to the 4-hour time frame. And here again, we can see some congestion, some hesitation there at the green zone late last week. It fell back down to the yellow zone, sat down on top of it, bounced off it a little ways, and now today we see it pushing through that yellow zone where it was support, now going to be our intraday resistance, because we just don't know if it'll stay underneath there over the next few hours. It could suddenly, with the current candle, turn right back above the yellow zone. So for the time being, as long as it's under the yellow zone, 97.30, 97.15, that will be our resistance. And above the blue zone, 96.80, 96.60, that will be our support. Back above the yellow zone, we may begin looking for some reversal. Watch for clues to reversal, infusions of buy orders, or some price action that implies reversal. We don't have any of that yet, but selling again at the bottom of the trend, limited profit targets as we look forward to continue the downtrend. Over to the euro dollar, very similar situation. Look at the blue circle back here on the left, the green, pink, and orange shaded areas. They give us a clue to where our support resistance levels are. Let's go ahead and zoom it in here on the daily time frame. You can see that the orange zone is 112.60, 1.1280. That is our orange shaded area and our next resistance. The pink zone here is kind of that breaking point, isn't it? It's that what was resistance here, now going to be our support. That's 1205, 1.1188, and then of course the green zone beyond that. If it breaks the orange zone, we'll look for the continuation of the current uptrend. But buying at the top of the trend, again, very difficult scenario. 4-hour time frame. Again, you can see that hesitation at the pink zone, sudden push through it. So again, that pink zone will be our intraday support as long as it's above it, but anything back underneath it could look for that reversal or retracement of the trend. And of course, we already know that this orange zone, not too far from current market price, 1260, is going to be our next resistance or potential break point for the continuation of the uptrend. Take it over here to the GBPUSD. an interesting rising channel within the uptrend, the blue trend line, the uptrend, this rising channel we see within the uptrend. What's interesting to me will be the resistance level there, the 1.3085, 1.3060 level. That's the orange zone at the top of the chart, and what would be the top of this channel. That likely or could become some resistance this week, early this week, as we look for a top for this run higher. So we'll look at that orange zone as resistance. Of course, a break of that changes the scenario, and we look for it to go higher. Back to the bottom side, the green zone, if you're looking for a buy in the direction of the trend and the channel, the green zone becomes your support target down here into 129.50, 129.20, and of course a break of the green zone, a break of the rising channel, the black trend line, and even a break of the blue trend line would look for some reversal. So right now, at least, if you're trading the pound dollar, we're right smack in the middle of the channel. You need to either wait for an extreme high, the orange zone, for resistance and potential reversal, or a low, the green zone, into the bottom of the channel for an opportunity to go long for the GBP this week. Take it over here to the USDCAD. This is another interesting area. We've gotten some Fibonacci on the chart from the bottom of the black trend line to the high. Look at this pattern. The blue trend line, red trend line, black trend line, red trend line. We have seen a pattern shaping up here. If it repeats that pattern and comes all the way down to the blue trend line, we have a pretty good ways to go still. Down to the 618 fib of that black trend line would be the green shaded area. Now, I don't know if it'll make it down there, but if we see a continued rise of oil like what we saw last week, we could definitely see it down into there. We're at a significant spot in the market, the yellow zone. 50% of the black trend line sits right here at the yellow zone. We also look back here with a red circle, significant resistance. So for the day today, the yellow zone will be our significant player. Above it, we could be looking for a turn back higher and a challenge of the red trend line. If it breaks underneath the yellow zone, the 50%, we're back down into the green zone. So the yellow zone is our decision zone today. Above it, we go back to the pink zone. Below it, we go down to the green zone. 4-hour time frame doesn't really give us any help here because it's just settled out into that yellow shaded area right now. So we need it to break below it or stay above it if we're going to look for a trade opportunity today. We do have the Forex Black Book is still green. Regardless of the fall that we had last week, it's still green. So if we see any momentum shift here, rising highs, rising lows, a green signal, it may give us an opportunity to dive into a long scenario looking for some turn back higher again for the dollar CAD. But I would also say that we probably want to see oil take a swift dive if we're going to see this turn back higher on the US CAD. Take it over here to the US yen. We had the downtrend momentum, big red candle, bearish candle here, came on down into the 111s and even into the 110s, but we just been stalled out here for about 3 days. Above the pink zone, 110.85 is the top of the pink zone. The orange zone has been somewhat resistance, 111.35, 111.15. Of course, above that, we'd go back to the green zone. By the way, we've seen it in this area before. If you look back to the left where the black box is, we've seen it in this area before. So nothing really new here. We're in congestion around the orange zone. Under the orange zone, we start to look for the turn back down towards the pink zone, which is the ultimate support. But beyond there, we could even look for further movement lower and a return to the downtrend. Back above the orange zone, specifically here on the daily, we may look for another tap of the green zone. Why? Because that's what happened, exactly what happened back here with the black circle, black box R. We can see that same similar scenario. So we need some indication if this is going to turn higher or continue to break lower. Let's take it down to the 4-hour time frame. Look at this area right here. We're just kind of stagnant on top of the orange shaded area. I would say as long as it's top of the orange shaded area, it'd be difficult to sell it. It needs to either be back at the green zone or under the orange zone. Maybe an intraday buy here into the orange zone may produce some opportunity for some pips back to the green zone for the US yen today. Over to the AUDUSD, we've been studying this currency pair for the past couple of weeks. We actually had a couple opportunities to go short last week into the green shaded area. It sat underneath the green zone under the black trend line, and 74.45, 74.60 for all last week. It sat underneath there. Now today we're challenging it. Look at the black trend line coming down and the green shaded area, historical support where the black circle is. We're at the top of the pattern. What we're looking for is one of two things here. Either an indication that the sellers are going to come back in and drive it down from the black trend line, top of the green shaded area, or we're looking for the breakout above the green zone. Those are the only two things that I want to watch for today. And let's zoom it in here. It either breaks out above, which this is just a challenge and test, it's not a break, or it turns back under the green zone and we look for a reversal to go back down in the direction of the black trend line. Let's take it down to the 4-hour time frame, and even here on the 4-hour, we've seen it above here before. Look here and here, we've seen it up here before without a breakout. So it's really the open and close above this green zone that would give me increased confidence that it's breaking out and going back to the orange zone. If it doesn't do that, then I'm looking for the reversal, the sudden turn back underneath the green zone, similar to what happened right here, and then potentially a new fall back down in the direction of the longer term trend. There's really two trends that we're dealing with here. We have the longer term black trend line, which really easier to see on the daily time frame. The longer term black trend line is the first trend, and then we have this shorter uptrend right here. So let's see, let's put that right there in the blue circle. So you see the short-term red trend line, the longer-term black trend line, and we're coming into that convergence of those two trend lines right now. So the question is, are we going to see the breakout? Are we going to see the reversal? What we need to do is just watch for clues and evidence to that around this green shaded area today for the Australian dollar. And lastly, moving over to the New Zealand dollar, we were stuck inside this box. Look how long we were inside that blue box at the bottom. We started all the way over here into April 27. So since April 27, almost an entire month now, we've been inside this blue box. Today is the first real significant challenge outside of that box in quite a long time. So the question is this the real deal breakout, or is just this a false breakout to fool people in to think it's going to go higher before reversing and going back down in the direction of the trend? Again, it's all about waiting for evidence to that. I would always say, and I say this every day in the trade room, buy low, sell high. If you're looking to buy something, anything, doesn't matter what you're buying, you want to buy it at a low price. And we're not at a low price, we're at a high price right now, given the subjective trend that we're looking at within this little upside move. We're at the highest peak high right now. So we're at a highest high that we've seen in quite a number of days, weeks even. So it's a difficult place to buy it. So one of the things that I would look for is either evidence that it's going to fall off of here and go back down, and the support would be the yellow zone, or the breakout here, we look for it to go higher. So even if it's breaking the black trend line, I still think you want to buy it at a lower price. So that would be likely back down here towards the yellow zone, the mid to low 6900s. That gives you a better buy price, lower risk, higher reward. Right now, it may not break this ping zone. We just don't know. It didn't do it the last time it challenged it. It didn't break it. So we want to wait for one of two things. It either breaks the ping zone to go higher, or reverses and starts to turn back lower towards the yellow shaded area for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.